So it's that time, so let's get started. So on behalf of Leanne Ballard and myself, we welcome you to our today's webinar. It has what we feel is one of the most valuable sessions that we have during the year, because it deals with something that affects businesses to a great degree, and that's income taxes. And it can be a complicated maze to figure out what will work best for you and your business. So we're happy to chat with you today about how to grow your business successfully and how you can customize your tax saving strategy. So welcome. Some housekeeping tips that we'll share. As you know, we invite your questions during this webinar. There will be 3 Q&A sessions and sections during our webinar. So if you'd like to use the Q&A panel on Zoom to post any questions, Leanne and I will be alert to them, and we'll look for opportunities to answer your questions during this webinar live. And then if you have some helpful comments as we're going through some of this material, we invite you to use the chat box. And if you set the chat box to all attendees and panelists, that will give all of us an opportunity to benefit from your fine comments. So those are a couple helpful tips prior to us getting underway. If you've been with us before, you know Leanne and myself. We're the presentation team for the webinar today, and we look forward to working together to share this topic with all of you. So we'll introduce a little bit about ourselves. So I'll start. I'm David Pankwich, a chartered professional accountant, and I enjoy very much over the last 25 years or so working with small business owners and entrepreneurs, different varieties of industries, income levels, different stages of growth, some starting, some mature, some passing off their business to the next generation. And we work together with the small business owners to help them achieve success. And here you'll see our mission statement, the one that we developed for our firm. So we know that entrepreneurs and small business owners are very hardworking, often many hours a day and often into the evening and weekends at times. And so our mission is to help you as a small business owner and an entrepreneur to have more time and more money for yourselves and your families. Looking for ways that you can work perhaps with a little bit greater insight into your business and the value of some tools. So that's what our mission statement is at our firm. And so one of the tools that we've created is an ebook. If you haven't already done so, at the end of this webinar, we invite you to download this free ebook. It will crystallize for you very quickly some key, concise steps that you can take right in your business right now to help grow your business successfully. And if you'd like some advice, we'll be happy to have a chat with you. But benefit from this ebook, you know, it talks about margins being squeezed, downward pressure on price. Often small business owners are working too hard and too many hours. So how can we make that business more enjoyable? This ebook, hopefully you'll find some excellent ways from reading it and being able to apply it in your business. And Leanne, would you like to introduce yourself and your team?
Yes, thank you, David. So yeah, my name is Leanne. I'm from Cloud Business Services. We are a multi-award winning team, and one that's mentioned there on the screen is we are the Intuit firm of the future. We pride ourselves on being forward-thinking, thinking outside of the box with our clients, and really providing a top-level quality customer service. So our main focus is around our clients and what their needs are and making sure we solve all of their pain points. That's a little bit about us.
Thank you very much, Leanne. And so Leanne's team and our team we had a good discussion some time ago and realized that we both had the same objective. We wanted to collaborate to provide a complete solution for business owners. And so our two teams got together and figured out a way that we could form a strategic partnership and really elevate the experience of small business owners growing a more profitable and enjoyable business. And so these webinars are an example of how we collaborate, our two teams working together. And so these webinars, what went into the development of them is what we discovered was that starting and growing a business doesn't happen overnight. You don't snap your fingers and you have the business of your dreams. It's a journey. And a success in any literal journey typically has three key components. A destination, you clearly know where you want to go. Secondly, a map, some type of route or path that you're going to track your progress on. And thirdly, a guide. If you can find an experienced guide who's gone down that journey before, how much more enjoyable and successful your journey is going to be. And so we find it's the same thing with a small business. As a business owner, you clearly started your business because you had a vision, you had a dream, you had something you wanted to accomplish by having your own business. So what is that clearly in mind? These webinars help you with that. And then how will you get there? You're at some point now. If you haven't yet realized the vision of your dreams, exactly where you want your business to be, where are you now? What's the path from where you are to where you want to get to? So we can help you with that. And then our two teams working together fill the role of that experienced guide. We've helped so many businesses grow, take the next step from where they are now to get to the next level, to grow a more profitable and successful business. So we're here to help you as a sounding board, as a guide, as a source of reference to assist you in your growth. And so we hope that you'll enjoy these webinars and this particular topic this month. So today it's all about taxes and how to minimize them. Because as we mentioned earlier, income taxes is one of the largest costs or outlay of funds that a business potentially can have. So we're interested in, within the Income Tax Act and the rules that are there, how can we minimize overall taxes? We're going to talk about some strategies. Then we're going to talk about salary and dividends. Maybe you've heard of both of these terms. Which one is right for you? What should you consider? How can you make a decision? We'll discuss some of those factors with you. And then we're going to talk about some key tax deductions. And how do you determine how you can maximize those tax deductions and therefore save on your overall taxes? And with all of our webinars, we look forward to answering your business questions live. So please feel free, as we mentioned before, to use the Q&A box and the chat for any comments during a webinar. So let's get started. So how can you minimize your overall taxes? Clearly, if you do, you will have more money available for yourself and the family that you're a part of. So clearly that's an objective that all small business owners have. Now with a corporation, as you will have noticed in our last month's webinar where we talked about the value of a corporation, having a corporation allows you to significantly defer taxes. Now, how is that possible? Well, it has to do with the fact that there are different tax brackets when you think of completing your personal tax return compared to your corporation income tax return. So what are the differences? Well, with a personal income tax return, we have a philosophy in Canada called the graduated income tax rates. So the more you make over a certain level, the greater will be the percentage of tax that you will pay personally. So there are several tax brackets. There's a federal tax bracket regime. There's a provincial tax bracket regime. And so here in Ontario, when you complete your personal income tax return, there's both a federal and a provincial tax component. And if you receive a full tax return created by your accountant, you will be able to see and pinpoint exactly what tax bracket your personal income level is in now. Now, without having a corporation, all of your income is going to be taxed in the year you earn it. No large ways of deferring other than perhaps an RSP contribution. But that's capped at 18% of your income. Now, when you think of a corporation, the benefit of a corporation is the first $500,000 in profit that your small business makes is all taxed at the low rate of 12.5% when you look at the federal and Ontario rate right now. Whereas at the highest income tax bracket in Ontario, it's over 50%. So there's clearly a big difference between over 50% tax on every dollar and 12.5% tax on every dollar. Well, what does that mean to you as a business owner? Well, it means that if you leave the profits in the business that you don't need to take out to maintain the lifestyle for yourself and your family, all of that income is not going to be taxed at over 50% potentially, but all at 12.5% until you need to withdraw it for personal use. Well, that means you're able to save having to pay the much higher personal tax rates on all of the income you don't need to spend right now. So think of how long that deferral can last. It can last several years, decades, as long as the corporation is in existence. So there's a very large tax deferral by being able to have a corporation and just taking out the funds you need for your lifestyle. So that's one way to minimize your overall taxes, and it's one of the most significant ways. Now, a second way is to select between salary and dividends. So without a corporation, there was one way to report your income, and that was typically on a statement of revenue and expenses as part of your personal tax return. Well, by having a corporation, you now have a choice. You're now in a position to make a decision every year. Will you be taking salary or will you be taking dividend out of your corporation? And we'll talk about the factors to consider in a few moments. Not only that, but you can decide the amount. If it's salary or dividend, you get to decide the amount you will take out. And you get to decide when you will take that money out. Can you see the greater amount of control you have over your income taxes when you have a corporation? Number 4, you get to decide who will receive money from the corporation. So what is allowed under the Income Tax Act? Are other family members involved in your business? What are their respective roles? What would reasonable compensation be for the efforts that these individual family members are contributing towards the business? These are all ways that you can minimize the overall taxes, both personally and in the business, not just for yourself, but for other family members that are also involved in that business with you. So several ways to minimize your overall taxes when you have a corporation. So here's our first opportunity to answer some questions that Those of you who have a small business and are on this webinar with us, we can answer them for you. Leanne, do we have any questions at this point?
Yeah, so I've got one question here, and the question is, do I need to decide at the start, or can I change my mind after I've kind of been in the corporation for a while? Like, how much flexibility do I have around these choices?
The great thing is you have a total flexibility. So you may say for the first year, you're going to take salary. That's something perhaps you're comfortable with. When you were an employee, you're used to getting a regular paycheck and salary, and you may decide that's what you're going to do. And then as you become more comfortable and experienced with your corporation, you consider more factors, you may decide that you want to involve some dividends. And the nice thing about it is at any time through your life as a shareholder of your corporation, you can make a conscious decision to adjust whether it's going to be salary or dividend, or perhaps both. And at what levels. You have complete flexibility having a corporation.
All right, that was our only question so far, David.
Okay, excellent. So thank you for that question, and we invite you to pose other questions throughout our webinar. So in our previous section, we talked about two options you have as a small business owner, taking funds out of the business to maintain your lifestyle and that of your families. So a natural next question is, how are you going to decide? Is it going to be salary? Is it going to be dividends? What's right for you? So there are many factors to consider, but we're going to share an overview of some of the key ones. First of all, as a shareholder, when your corporation was first set up, you received a share certificate in some way. When your corporation was formed, there needed to be documented who was going to be owners of that corporation, who are referred to as shareholders. And by virtue of you owning a share in the corporation, you are entitled to receive dividends on those shares every year. So that's one option, to receive funds from the corporation, to receive a dividend because you're a shareholder. But the unique thing that small business owners have is that they also often work in their business. And so because of the efforts they're putting forth in their business, they are also viewed on the Income Tax Act as an employee. And so they can also receive a salary from their corporation in the form of wages or a monthly salary. So as a small business owner now, you need to decide between these two options. And you can decide that you want a blend of those two options, because that's what works for you in your situation. So how can you make that choice? Well, there's two main factors to think about. One is your own specific situation. So we go through the math, we go through the analysis. We consider what is unique and specific about you as a small business owner, your immediate family. We look at several factors. And then we also take a look at what are the choices and options, given your situation, with what's outlined in the Income Tax Act, what's allowed, what's permitted, what's approved. And we mesh those two frameworks of factors together to come up with what we feel is the optimal result for you as a small business owner. So that's the basic method that we go through. So let's consider some of the factors then that we would consider and suggest that you consider. The first one is immediate costs. So with salary, there are payroll deductions to remit every month. So the corporation will need to be paying out the employer portion of Canada Pension Plan and withhold income tax deductions. That amount will go out of the corporation to Canada Revenue Agency on a monthly basis, typically. And so you will not be receiving the gross amount of that paycheck, but the net amount after Canada Pension Plan and income tax has been withheld. So there's an immediate cost there because now the corporation needs to be able to fund the Canada Pension Plan, the employer's matching portion. With dividends, there are no withholdings. There's no payroll deductions. You simply write a check from the corporation and the full amount is given to you. So you can see there's differences in the immediate costs. Second of all, personal tax deductions should be thought of because it's very interesting under the Income Tax Act, certain personal tax deductions that are permitted are only a benefit to you as an individual on your personal tax return if you have what the income tax refers to as earned income. Now, earned income meets the criteria of a wage or salary. Dividends are not considered earned income. So, for example, if you have children and you have childcare expenses, if you only have dividends for that year from your corporation, that childcare expense income tax deduction will be completely lost to you. You need to have earned income to be able to use that childcare expense as an income tax deduction of benefit on your personal tax return. So again, that's where your personal family situation comes into play in determining what level or both would you benefit from, salaries or dividends. And then there's personal financial planning. So keep in mind that one of the reasons you likely started your business was to provide into the future for your family. And as you were considering that, you likely have a horizon as to how long you would like to work until, how much you're hoping to build up by that time so that you can fund your retirement and the other needs of the next generation of your family, perhaps. And so as part of that future personal financial planning, you think of what is it you're going to be entitled to when you retire. And one of the benefits of having a salary or wages is that there will be Canada Pension Plan that you're contributing to every paycheck. And when you retire, for as long as you live, you'll have access to Canada Pension Plan benefit. Well, that's only possible if you're receiving wages or salaries. If you receive simply dividends from your corporation, there will be no CPP pension plan benefit to you when you retire. So are you hoping to incorporate a CPP pension plan benefit in your retirement planning as part of your personal financial planning or not? That will weigh into whether you will be weighing more of compensations towards salary or dividends. And then involvement in the business. So the criteria to receive a dividend as an adult is basically dependent on the share ownership that you have. Whereas if you receive a salary, one of the components is it commensurate or reasonable compared to the effort that you or another family member are contributing to the business? Now, there's a number of factors to consider. We're making some general statements to help you understand that there are some limitations in the salary route compared to the dividend route, depending on what type of shareholder the individual may be. So there are different factors to think about that can determine whether you'll be weighing towards salary or dividend in your compensation planning. And then there are other factors to think about. And the list goes very long in considering a number of family situation dynamics. So are you part of a married couple? What is the income level of your spouse? Are there adult children that are also earning income? Are they contributing towards the family household budget? What then do you need to take out? Are you a believer in RSPs as a way of making contributions towards your retirement? Or do you prefer to leave those funds in the business and invest through the corporation for your retirement? So whether you decide to have an RSP contribution or not, as you know, RSP contributions are only possible if you have earned income again, which means salary, wages, and RSPs aren't possible if you simply have dividend income. So there's a number of other factors to think about in making your decision as to what's right for you. So again, we'll pause here and based on what we've shared with you at this point, ask if there's any questions on the content that we've shared just now.
All right. So the question I have here is there any possibility to take the dividend or the salary and do income splitting with a spouse, especially if the spouse is not already in the corporation?
Especially if the spouse is
not in the corporation.
So in this context of this scenario, is the spouse a shareholder?
No.
Okay. So in that particular case, if the spouse is not a shareholder, the spouse will not be entitled to dividends, because dividends, to receive dividends from a corporation, a person must own shares and be a shareholder of that corporation. So income splitting with dividends would not be possible. Now, with the other option of income splitting with a salary or wages, what's important to consider is the Income Tax Act has an overriding phrase, what is reasonable? So again, you would look at what is the effort that spouse is contributing towards the success of the business. What is their role? Perhaps the number of hours they work per week, the number of weeks perhaps that they work in a year. What is their role? What is their skill? What effort are they contributing towards that business? And what would an independent, objective person feel the value of that contribution is? Those are some of the ways to determine what wage or salary could be paid to the spouse every year. And of course, it's fact-based, so you would look at each specific situation uniquely, independently. What is the business owner contributing to the business? What is the spouse contributing? And what is fair and reasonable? And so we have a lot of experience with a variety of small business owner, family and spouse relationships in the business, what's reasonable, what CRA will accept, and we'd be happy to share that expertise with any of you if you'd like to book a call with us.
Perfect. Okay, that's what we have for right now, David.
Excellent. So now we're going to move into our third section, key tax deductions to consider. So keep in mind that our overall theme is looking for ways to customize your tax saving strategy. And one way to do that is to take full advantage of some key tax deductions. So we're going to consider a few of them. And Leanne's going to lead this part of our discussion. So Leanne, what are your comments?
Right. Okay, so we're going to start with our home office for our business. So are we able to write off a portion of our home? And again, as David's kind of alluded to throughout, everyone's going to have unique scenarios for all of these, and your scenario may be more broad than what I'm going to cover here. But to keep it simple, if you are utilizing a portion of your home for business, there is the potential for you to utilize that to reduce your taxes being paid out of the corporation. So what you want to do is make sure that you assess for reasonability the portion of your home that you're going to use for business, and that you track the expenses within the home so that we, or our team or David's team, can at tax time calculate properly how much of that you can utilize to reduce your taxes owing. The second one here is your vehicle for business. So same idea. If you're utilizing your vehicle for business, whether it be a personal vehicle or a vehicle purchased in the corporation, you want to understand the portion being used for business versus the portion being used for personal, so that come tax time, again, we can help you calculate the amount of that will lower your taxes owing at the end of the year. Meals and entertainment. So the definition of meals and entertainment is meals where you're taking a client out in order to earn business. So this is relevant probably more so in certain industries than others, but definitely something to be considered as you're going through your year, and how much of your meals you can consider as meals and entertainment in order to reduce your tax owing. And then finally, any capital assets or expenses purchased throughout the year. So we look at any items that you've purchased throughout the year that are in a corporation greater than $500 and that you're going to utilize for a period of time longer than a year. So it's something that you're going to want to depreciate over several years. That being dictated, there's a lot of rules by the CRA as to what can be depreciated and when, but luckily David and his team knows those schedules. But you want to keep track of large purchases, how quickly you can depreciate the cost, how you can spread it over several years and utilize that to your benefit to save the maximum amount on your taxes. Is there anything that I haven't stated, David?
I think you've done a very nice summary of these 4 areas, Leanne. Something that we've noticed in our practice is sometimes a business owner will have 2 places that they work out of. They might have an official business address, but they also using part of their home, because almost 24/7, they could be on call to deal with work-related items. So the question comes up is, if we already have an official rental location that's client-facing, shall we say, can you also write off a portion of your home office in your home? And so the benefit of working with our team is that we're knowledgeable about a variety of situations that CRA has ruled on. And so we're able to see their analysis, their commentary as to what's acceptable and what is not, so that as a business owner, you can take full advantage of what's permitted under the Income Tax Act. Something else too that we've noticed is, the way vehicles are owned can have a significant impact on a person's personal taxes. So for example, if you have a vehicle that you use for your business, business owners will often ask us, should this vehicle be owned in the corporation or should it be owned personally? And there can be some very large, unexpected personal taxes as a result of that vehicle being owned in the name of the business. And so we have a full discussion with our clients and help them to understand the wisdom of where that vehicle should be owned and how, and different ways of maximizing the vehicle expense tax deduction. So those are a couple other things that we've seen in our practice.
Very good, David. So checking in on questions here. I have a question about how much is reasonable when it comes to utilizing your home? How would you determine the space that you can truly reasonably claim on your tax return?
So it's interesting looking at the Income Tax Act and also the way CRA has interpreted the Income Tax Act and made some administrative policies. There's square footage is one methodology. The number of rooms you use divided by the total rooms of your house is another methodology that's accepted. And I think there's also another way you were thinking of, Leanne, that you've seen take place sometimes.
So if I'm correct in where you're going, David, there's also the time factor, right? The amount of time that certain areas are being utilized for business.
Yes. So all these factors come into play. And so that's why we really suggest, you know, there are software programs out there that you can type numbers into. But while it might be accepted by CRA, it doesn't mean that you're maximizing the tax deductions allowed under the Income Tax Act. So filing a personal tax return may be acceptable, but you might not be benefiting from the valuable advice from working with a trusted business advisor and tax professional. So that's where we really, you've heard this phrase, leave it to the experts. That's where we suggest you meet with us and our teams. We'll go through what's your options are in your particular situation so you can maximize the strategy for you.
And I think that's probably the most important aspect of that is every scenario is different. And of course, doing what we do, we've heard all kinds of interesting things that have come our way as to what can and cannot be utilized. And it's just important to have that expert who understands what the CRA is going to be looking at.
Yes, and as we talked about earlier, you know, traveling this road of building a successful business is a journey. Having an experienced guide, so having someone who has experience in knowing what CRA will accept and what CRA will not accept allows you to stay on a straight path, a successful path, not go into any of the pitfalls that you can fall into, but maximize what is allowed under the law and benefit from having more funds for yourself and your family and enjoying more of the life that you dreamt about when you started your business in the first place.
Very good. Okay, that's all of our questions.
Okay, well, very good. So now we have some closing thoughts to share with you. These webinars are one way that our two teams help small business owners grow a successful and profitable business. Another way is by accelerating your growth by means of a business bootcamp, which is a structured, comprehensive program where you're able to rapidly grow your business for small business owners who are ambitious and want to take their business to the next level as quickly as they can in a structured approach. That's what this business bootcamp program is all about. It's a business accelerator program. So if this is something that you'd like to benefit from, and these webinars give you a taste of what this bootcamp provides, we invite you, when you receive our survey at the end of this webinar, to indicate you'd like more information so that you can learn about when the next intake is for the business bootcamp, and you can benefit from the structured acceleration program. So we invite you to think about that. As well, in a follow-up email to this webinar, you'll be reminded of the invitation to download our free ebook that we mentioned at the start of our webinar. Why not take a few moments with a coffee or tea and find a quiet place to reflect on? Think of your business, think of the suggestions that are given. What can you implement right away and help grow your business profitably and more successfully. We invite you to join our Facebook group that will allow you to communicate with other like-minded business owners and share thoughts as to what they benefited from, and you can contribute as well. We invite you to book a free discovery call. So you're able to do that quite conveniently in the follow-up email that you receive, or you can visit our website, www.pankwich.com, and book a free discovery call so we can find out where you are in your business journey and what might be the thoughtful next step in your journey and how we can help amongst our two teams. And then we invite you to sign up for the next webinar. We mentioned earlier that when you started a business, you likely had a vision, what you wanted to achieve from starting this small business. So that's what next month's webinar is going to be all about. How to achieve your business vision, the goals, targets you've set for yourself in life. How can you achieve them? That's what next month's webinar is all about. So we hope you're excited as us to talk about this topic, and we look forward to you attending along with us. So we want to thank everyone for joining us today. We appreciated your participation, your questions, your attendance. We hope that what Leanne and I have shared with you today, have given you some food for thought, some perhaps follow-up questions you might have. We're happy to connect with you. And we hope we have shared with you something today that will help you even have greater success in your business journey. Leanne, some closing thoughts?
Big thank you to everyone who attended, and also just pass the information along. If you found it valuable, please do share our information so others can join in as well.
Thank you, Leanne. So until we connect with everyone again, we want to wish everyone great success in their business journey, and bye for now.
Thanks, everyone.